Hello everybody. Today I'd like to touch on a few stuff based on SMT, SMC trading, smart money concept trading. Let us look at cadjpy. I was actually looking at cadjpy right now. And I discovered that I actually missed a good trade over there. But nevertheless, let me break it down for you on how this trade. So we'll start from it with it from the back. So we see that card JPY over there made a peak formation over here, which is half Batman. And then after that, card JPY had to retrace back to the supply area, which is around this candle over here, around this candle. But what I usually like doing is actually taking the body of the candle, only considering the body of the candle on where card JPY should actually reverse. And from there, I realized that there is actually an impulsive move, correction impulsive move, and this is a huge correction so that the market can go down. So we can see here in this case, these are area of interest. So another area of interest could have been the order block. But anyways, fair value gap was filled up, and here there was fair value gap left, and also here. So probably to come back to that area, tap on that, and then move towards the downside. So as we can see, let me just put it right there in the middle and try to make that a little bit large. Yeah, so let us just break it down here. So as you can see here, we had what you call was a change of character. We had price going up, closing above the highs, above the lows. I'm sorry, closing above the lows, and this is the only time that price came and closed below this low. So this was our change of character. Let us just highlight it there, change of character. Change of character, right? Yes. So after we had a change of character, what do we expect? We expect price to go back to the order block that became responsible for the law, for creating this law. And what order block is that? It is that order block over there. We can even consider this order block over here, but nevertheless, you just have to take the one at the top right there, so that you can have a little bit of stop loss. So we take that order block, and then the market starts coming down, and you can enter a position here. Let's see, your stop loss would be as, so we reduce the stop loss to above the order block. That's about 2 pips, 2.3 pips, is it, or it's 3 pips? Let's just enlarge that so that we can be able to see. No, it's supposed to be somewhere there. Okay, let's just enlarge those. Let's just enlarge them. So it's about 2.3 pips. So it's 2.3 pips, the stop loss, and maybe you target the lows. We're looking at 1 is to 17 trade. Target these lows here. Let's just target those lows, below those equal lows. So we're looking at a trade which is about 1 is to 20. 1 is to 10 with a 2 pip stop loss on JPY. And if you actually wanted to target the very lows that are here, you'd be looking at a trade that is about 1 is to 45. So 2 pip stop loss. So if you were to put one lot there, you'd be risking $20 to make, I don't know, times 45. Yeah, so that's how much you'll be putting to make about 20 times 45, which is about um, 1 is to that. If you risk $10 on this trade, you're gonna make $450. So if you risk $20, you're gonna make about $900. About $900, 900 and something dollars, considering the 2.2%. So yeah, that's what there is on the card JPY. That's what I've learned so far. That's what I've learned. And if you actually check on the 5 minutes, for it to use the 5 minutes to actually enter, you can see that we have a beautiful pattern over there, morning star pattern right here, right there. And maybe you could enter after this close of this candle, and once they tap into that fair value gap, you know that there's an interesting point that you actually want to enter at. And if they close above that, you enter your trade right there with your stop loss above. Then I'm sure it would be about, let's just check that out, that should be about 9 to 10 pips over there, that you would have. So if you were to risk $100 on this, you'd be having so much money. So the risk becomes high. So that's why I prefer to enter right maybe at the close of this doji over here, at this indecision candle over here, close of that with my stop loss above there, it's still at about 3 pips or so, and you could actually have a beautiful trade, or you could actually enter at the order block if you know that the market is actually going down. So as you can see, this was a beautiful trade that one could have taken with an M formation right over there and to the downside. Then from there, the trade returns to the order block, and beautiful trade that one could have taken. Let's also see on the Xiao what's going on. So on the Xiao, we have a break of structure to the upside, and there's some liquidity being left here, and some all this is gonna become, it's gonna be filled at some point. Yes, it's gonna be filled at some point. So Xiao might be actually going to this order block here and coming all the way down. So let's just mark that out and see if that actually plays out pretty much well. If that actually plays out, we'll see how this goes anyways. We'll see at how this goes. And then we have the DXY over there. So I was anticipating that market could actually come, take out that and go all the way up. So the market still hasn't taken out liquidity and come all the way here. So we're still yet to wait. But I had a position on AU, hoping that the market could actually do that, and the market actually did that. Went there with one, two, three, four candles, about tapping into that area, into the zone, and the market was coming down. Right now, my position, well, I'm at break even, so I'm actually protected in this position. So we'll see what happens. Also, there's news coming up at around 5 o'clock GMT time. So in about 18 minutes time, there'll be news coming up in the markets. So yeah, that's what there is. Excuse me. Okay. So that's what there is to it in this market that I'm seeing here. And GU, what's happening there? So in GU, we got stopped out a little bit after we saw the change of character. We decided, well, let's just go for the order block. Yesterday we did well on the trade on the H&S pattern that was here. We did enter a good trade and did well on the H&S that was here. Entered our trade right over there. We came down with the market, so it was a good trade. So here we have this as a bearish flag to the downside. So that's what I'm hoping, and that's what I'm still anticipating the market could do. Or the market could actually go all the way up to that area here, this area here. So as long as my stop loss is tight, my risk management is good, then I'm okay. I should be safe. And then here we have the US 30, the US 30. I had a sell position here yesterday and it got into profit. I managed to uh, put that on after I saw this bullish what you call this flag happening. I was like, nope, it's time for me to get out. And then I got out about here at break even. I still okay, it's still fine. So I'm hoping the market maybe might get to that area over there and then come down, taking out this liquidity here. So I measured that as my order block. Actually, that's why I took this trade, taking out this liquidity over here. So yeah, that's what there is to this market. Let me just do that. Liquidity. Let me just take that out. Liquidity. Yeah. So the market might actually come back up and do that, then come all the way down. So I'm really anticipating sales over here. Everywhere gold, I'm anticipating sales. cadjpy, well, we've already explained that. Euro USD, hoping that the market would actually come down and go all the way here. We'll see how the news goes, but the news looks positive for the dollar. So I might actually as well get out on this trade. It looks positive. We'll see how it goes. And anyways, I'm at break even. So if the news come and they actually go my direction, well, lucky me. And if it actually goes up, all I have to do is just scale down my positions, and maybe I could grab a few pips to the downside if actually it becomes positive for the dollar and negative for the euro. So I'm hoping that the market would actually come down. Yes, I'll just reduce my risking and my sizing over there. So, guys, be careful out there and have a wonderful trading journey. And be careful out there. Don't let the big banks get all this money, we should also get all this money, because it's there for us. It's there for us. Remember, you put your psychology right. Like I said, everybody, almost most of the strategies out there, they work properly. The problem is the psychology of the people and the psychology of the traders. So the traders should watch out for their psychology and be able to take losses when they should take losses, and be able to be okay with that. And also, excuse me, traders should be able to discern between an uptrend and a downtrend, so that they can be able to get out of the losses if they see that no, this the trend has actually began to go up, not to go down. And do not see things. Let the market show you things, and let the market show you the direction. Let the market show you everything. Do not see things of your own self, because this is what messes up with the trader's psychology at times. So get out there and let's kill these markets. Ciao.